The Trump administration could be softening its stance on China, and euro-US dollar remains volatile. I'm Fiona Cincotta at StoneX, speaking with Vice President of Clearing and Execution Sales, Bertrand Oesterle. Thank you for joining us.
Morning, Fiona. Thank you for having me.
So, Trump is considering a deal, or at least appearing to soften his stance towards China and a potential de-escalation with China. What's been the immediate impact on grains and oilseeds that you're seeing?
So we came to the office this morning to first of all find the metals team quite buzzing on copper. So very similarly, China and the US having some respite in terms of escalation could mean more demand for copper, and that translates directly into our world of grains and oilseeds similarly, but on soybean. So soybean, China is the number one buyer in the world. It imports 98 to 105 million tons a year. It buys Brazilian, but it also can buy US, and we had mentioned over the past few weeks that they had bought pre-tariffs a fair amount, some 6.5 to 7 million tons of US soybeans. If the tariff de-escalates, then China might make a gesture of goodwill to talk about imports of US soybean origin. So that comes on top of other discussions about tariffs. We had Japan stating that they might look at buying some US rice, but also US soybean. So it's all about those words of concession, and Trump loves the fact that people are coming to his table talking about concessions. So going beyond this, it's two elements where we could have demand coming in to the market again. So soybean has reacted to the upside, and it is within the framework of what we had discussed last week, where we have still an EPA potential decision on US biodiesel blend that could also provide some internal demand in the US. So already three elements that could be bullish. Beyond this, we look at the Brazilian soybean crop, which is now completely or almost completely harvested. We had mentioned in the past that it is good yields, a record crop, but it feels like the spec industry is looking at it as factored in, and therefore they're looking at the elements I've mentioned previously. The Argentine crop is also under harvest, and it is slow because there's been some rain, so it adds on a little bit of bullishness again. And all those elements make for the specs having gone from a short position to a long position over the last CFTC report. So it looks like we're gearing towards some support, but it will all depend on the Trump announcements or the Chinese reverse announcements over the next few days. We've noted as well that China has been cautious by saying that they are warning countries over their deals with the US. They're saying if it is detrimental to China, they will retaliate. So there will still be a lot of movement, but for the moment there's a kind of switch to some buying into soybean. And that's going to be interesting because we see that with the potential exports and with the potential EPA decision, soybean oil could be supported, soybean meal could be again under pressure. Soybean meal around July is around the 300 mark. We'll probably look at the 280 mark, the 290 mark again from a feed compounder point of view to see if they come to buy back again. We've seen them in the past. So it makes an interesting soybean complex element where soybean has got an immediate bounce on the back of this announcement, but soybean meal could become interesting.
Excellent. So still plenty to be watching out for.
Mm-hmm. Absolutely.
So beyond the obvious soybean reaction, which you've spoken to us about, has there been any other further impact? And I'm sort of thinking here about the euro-US dollar, the volatility we've seen there as it's risen to multi-year highs above that 115 level. How's that sort of affecting your realm of grains and oilseeds?
It's been a major talk of discussion over the past couple of days, especially as we came back from the Easter break. So if we look at the 2nd of April, and if I look at the DEC EuroFX, we were at 109.91 and a half. We fast forward to Monday, we're 117. I mean, it's gone massively up, and the market is quite shaken by it, especially the European producers. With today's announcement, we've seen the DEC EuroFX go back down to 115, but it's still a massive move from below 110 to 117.5 to 115, and it creates an awful lot of stress. So why is there so much stress? Just because as the euro goes up, it makes European wheat much less competitive on the world market, and producers are starting to talk, saying, what is going on? We're going to produce, we're likely to have a better production overall, but if we can't sell that wheat, well, what are we going to do with it? So there's a kind of little bit of an element of panic, and also trying to hope for a reversal in the euro by the time we harvest. When I explain this to some of the specs, they're absolutely shocked, saying that they can't believe that some of the producer groups are not hedging that euro FX element. So it's been a major element of stress. We've seen that there's also a technical gap underneath, so we could see a retracement. And when we speak to our US analysts and US strategists, they mention that US economists believe that the euro could go to 120. So we could see more pain before we see some relief. Today's announcement from Trump has created a bit of a vacuum on the euro dollar, but it is still very high. So if we go then beyond the euro FX only, if we look at wheat, there's been quite a bit of information coming in. Some bearish, some still slightly bullish. The bearish elements being India and Russia. We've seen that India has mentioned that their April 1st stocks were 11.8 million tons. That's a 3-year high. That's some 57% higher than last year at the same time. And it takes away that story we've had for about a year, year and a half, that India had some fundamental issues and that it could come to the market to buy anything from 3 to 8 million tons of wheat. So it goes back to what we were saying previously. It felt like this issue was politicized, and it feels like those stock announcements are taking the story away from the market. Now, to come back to Russia, Russia stated last week that their crop conditions were 93% good to satisfactory. They gave us an update this week. It's 90%, so it's gone down a tiny bit, but it's still very good. So that's the bearish part. And on the weather front, for the bullish part, we still hear from the US that despite the recent rains, there's some areas which are still dry, so we will have to monitor this. And the conditions this week have gone down from 47 to 45%. And if you remember the discussion we had when we first started about a month ago, we were at 55% good to excellent ratings in winter wheat in the US. And people were saying, we think that's going to go down. And we've seen it going down by 10%. So those people were correct. Yeah. Now, beyond this, we've seen also some mention of China being dry in the northern plains of China. We had one article in particular stating that up to 30% could be at risk of dryness and hot weather. We will have to monitor that situation. And then I can't help it. I put my boots on the ground once again. I went to Belgium for Easter, went to visit a few fields. And I did tell you last week that the fields in Alsace-Lorraine looked pretty good. In Belgium, I saw fields that were slightly different. So some areas had wheat fields that were coming out of dormancy with some empty patches, so which means that there was too much rain at some point in the early season, and those empty patches means that the wheat didn't settle, and those empty patches were dry. So it feels the same as other parts of Europe I visited. We will need regular rain. Now to come back to the specs must have been very good at anticipating that euro-dollar move, to come back to it, and it explains much more easily now why they piled into such a short in Paris milling wheat. They were short, I mean the funds in particular were short 262,000 lots 2 weeks ago, 235.8 last week. We're going to get an update today. With such a movement on the euro dollar, that short is likely to remain. The concern for the trade is to see that the May has gone down to 208, but also the September, which is new crop, down to 208 or around it as well. It puts a level to restart the new season quite low, and that is a concern for the trade as well, especially for the producers who have that euro dollar to worry about and a very low starting point.
Last week we were talking about the Brazilian safrinha crop. So what recent developments have we seen in corn?
So for the Brazilian crop, nothing has much changed in the sense that we still have a crop which is in pollination stage. It's very crucial. And the local analysts, but also North American analysts, are telling us that the crops still need rain. So we will need to continue to monitor how that pollination goes and how it affects potential yield, potential for production. Some are very optimistic, some are a bit more cautious, thinking that we need regular rain. There's been other developments in corn. We obviously have the planting going on in the US. It has started, and there's been some rain. So that rain is going to limit some field work, but as of last Monday, we were 12% planted in the US. That's ahead of the 5-year average of 10%. And our expectation is that as the week goes along, with the rain that is coming, we might have a catch-up with the 5-year average. So the progress this week might be a bit less. We still don't think that it's an issue at all. It's too early to say, and for the moment it's too early to look at how it could impact potential further yields later in the season, but this is something that we will have to monitor on a regular basis. Now, talking about the US, the Chinese-US potential alleviation of the situation might mean that China may come on corn. It's less likely, but the export pace from the US has reduced significantly as we had expected. So Mexico had front-loaded its US imports pre-tariffs. At the time, the export pace from the US was around 9% above what we need to get to the USDA target for the year. We're now just 2% ahead. So we had that slowdown in exports as we had expected. Then in terms of ethanol demand, the US are still pretty strong. The ethanol stocks have gone to about 26.8 million barrels. They're not as high as the record we've seen recently of 27.5, but compared to where we are normally in the season, 26.8 is still very high. So we still see that kind of internal expectation of demand. Then if we look outside of the US, planting is well underway in parts of Europe. So France, as a national level, is 39% planted. I spoke to one of our clients, merchants in the southwest of France yesterday, who was saying that they are already 50% planted, and conditions have been really good for those first 50%. It is raining now, it's slowing down field work, but it's looking quite nicely, quite a nice start to talk about to start with. And then for Germany, we hear that corn planting has started as well.
Yeah, and Ukraine?
Oh yes, so Ukraine, we've had some news from a poll from Reuters, or LSEG as they call themselves. They've got a potential for 14% higher production this year, and the figure we were given was 27.9 million tons. So we will also have to monitor if we have good harvest results and a confirmation of that higher production level.
Now, we've spoken about it before, and do you have an update for us on US port fees?
So it's been ongoing for quite some time. Initially, it was quite grey, quite unprecise. We had over the weekend some precisions, and those precisions have come as a relief to the market. So it confirms one thing: Chinese owners, Chinese operators, Chinese built vessels will have some level of fees, but those fees would be applied very differently. It's no more per port call, it's going to be per US voyage, and with a maximum of 5 voyages per year that will have additional fees. The more important element is that it's no longer at fleet level. So the big fear in the past was that if you had 100 vessels, 97 were non-Chinese, and you had 3 Chinese. If you sent a non-Chinese vessel to the US because you had 3 Chinese in your 100 fleet, you would be imposed fees. That has been taken away. So it's no longer at fleet level. That's a big relief. And more importantly, the bulk commodity exports out of the US will be exempt as long as a ship comes empty. So that's the bit of the tricky element. Why would somebody bring an empty ship to the US? But if it is to help US exports, it will be exempt. And the size of the vessels that has been mentioned means that we can expect that grains and oilseeds exports out of the US, whichever vessel it is, should be exempt.
And finally, what are you going to be watching out for going forwards?
So I've mentioned a lot of fundamental elements already that we're going to follow, but more interestingly, we've looked at what elements of trading that people may focus on. And it's been very interesting because we've spoken a lot about spreads and arbitrage. So with the Euro FX, which we've mentioned, which has moved a lot, we've had a lot of spec interest into the DEC 25 Chicago wheat arbitrage with a view to sell it in the upper 30s. With the euro dollar movement, that's going to create opportunities. We think that we're going to see more trading in that arbitrage. Similarly, we are close to the end of April, first notice day for May contracts in Chicago, and people are looking at the new crop more, and we're looking more at spreads. So we're looking more at the SEP-DEC spread in wheat, in corn, or the SEP-NOV spread in soybean. And all three in the US, but also the SEP-DEC in Paris, have had some double bottoms or levels which are close to a recent bottom. And it feels like the market is looking at those spreads with a view to see if we go and test that bottom range once again. And if we do, if we don't break it badly, maybe come and buy into it. And as I was mentioning earlier on, I think that people will look at the soybean meal opportunity if we lose 10 to 20 from 300 to 280 or 290. We expect the feed industry to potentially come and buy into it. And I think that the spec is noting and looking at that level as a potential new entry point.
Excellent. Well, listen, thank you so much for talking us through the latest developments and what to be watching going forward. Thanks again for coming.
Thank you.
For more videos like this, please do like and subscribe.